we're putting it to the test. Dividend investing versus growth investing. Now, this is my spin on this. You guys know I am a dividend investor through and through, but I wanted to do a growth account just to see how it could perform. So this is the Spencer Invests Growth ETF that I have created, and I am super, super excited about it. It's really fun. A lot of these stocks are so overpriced right now, but they just keep going up. We'll see. This could be one of the worst decisions I ever make in my investment journey, but at least it's going to be entertaining. That is the goal. I want to see how these stocks can perform. Are dividends really the best way? Should I stick to growth? Should I stick to tech? What are we going to do? That's what we're going to find out on this long journey that's going to go mostly through 2025 unless it ends terribly and abruptly. So I hope you guys enjoy. If you're into stock investing, dividends, ETFs, everything involving money in the stock market, you're in the right place. Don't forget to like the video and subscribe. Thank you guys so much. We well surpassed 5,000. And so our goal for, 10,000 for 2025. We'll see if we can get there. I appreciate you guys so, so much. Let's roll the intro. So I actually did it. My account saw some growth purchases today rather than just dividends for my Roth IRA, which is very, very interesting. So we're going to go through and do a breakdown on all of these. I'm going to talk about why I chose them, what I like about them, and we'll give a little bit of a history and an understanding of what the companies do. Now, I'll warn you guys now, some of these companies I bought, I don't know enough about. And I bought them for strategic reasons. Normally when I buy a stock, I watch it for months, and I just didn't have the ability to do that with a lot of these. But I think that they all have a good chance of at least performing average for 2025. We may get some that do better. We may get some that do worse. That's what tends to happen when you buy 10 stocks and just hold them and see what happens. But I am curious. So this is going to be an actively managed ETF. And what that means is I'm not necessarily going to hold just these ones the entire time. So if Tesla goes up 40%, I will probably sell it. And I'm just going to say that right now because I think that's a good way to actively trade. If I was going to make my own actual ETF with stocks in it, I would actively manage it. And so if you guys think that's a terrible idea, let me know in the comments down below. As we can see over here, our 52-week range, all of them except for one are over half of their 52-week range. So they're doing well. They're performing well. There has been a pullback. Today was a rough day in the market as we saw on the daily screener. And so I'm okay with that. I'm glad we bought on a pullback day. Fridays, typically, I don't know if it's just me. Normally Fridays are red days for me, at least in my account. I don't know if it's an ongoing trend. So we'll see how they pick up next week. I am really, really excited to see how these ones do. So let's do a breakdown. Let's get into it. We're going to pull up Google Finance, and we're going to cover each of these in about 2 to 3 minutes each and get a full picture of what the stock is and why I like it so much. I'm going to start with what I know best, and that's TSLA. This is Tesla, and wow, up almost 70% on the 1 year. This thing continues to just outperform all my expectations. So I owned this, and I actually sold it. I think I sold it in the 260 range. So you'll know that I lost money on that trade. I mean, I made money on the trade, but I lost potential income on that trade. But we got about $100 into each of these, which is great. They're only a couple cents over or under 100 because Fidelity is really good at getting the exact amount with the fractional shares. But wow, market cap 1.24 trillion US dollars. We go to the 5-year. I mean, we can see this thing has just been going insane. It did hit 400 once before. I do expect a pullback. I'll say that. You guys saw that it was red today. It's been red for a couple days now. I do expect a pullback for a lot of these. But why do I like Tesla? I mean, besides the fact that it's stunning, you can look at the news. You can see, look at the Model Y. I didn't even know this. Tesla, I think, it's the parent company of EVs. And it goes above and beyond that. Tesla, because of Elon Musk and what it's become, the charging aspect, all of these things. I lost a ton of money on CHPT, that's ChargePoint Holdings, because Tesla came and blew them out of the water with the supercharge, the quick charge. It's absolutely crazy what Tesla does, how they're innovating, and what they're doing. So, I mean, the PE ratio is 108. So that just goes to show you this company's been doing really well. I think it will continue to do well. It may come down a little bit, but I think 2025 will be a positive year for Tesla. We can see, again, last year up $160, which is just under 70%. So will it do it again? I don't know, but I have faith in Elon. I have faith in Tesla for the long run, even if it does come down a little bit. So let's jump into our second selection. Palantir Technologies, ticker PLTR. You guys, I was watching this sub $20 and I didn't buy it. And you know, I'm going to say that with a number of these stocks because they've just gone crazy. They really have. They've just gone absolutely insane, and they probably need to come back to an area of the 40s to hit their value. PE ratio 340. That's insane. Larger market cap, 153 billion USD. I think PELTR in the long run will be great. It spiked up to 35 prior. I think it was a SPAC before that, and then it traded way down in the sixes, and now, well, it was at 80. We've come down a little bit. So on the month, we're down 5%, 5 days down 10%, 10.5%. So not a bad buy. I mean, I didn't buy the top, but I think we're going to see some coming down for this one, which is okay. The reason I like PLTR, I like the CEO. I've watched a couple of interviews with him, and he just seems to know what he's doing. He doesn't really care about investors as much, which I know is like, well, why are you investing in a stock if they don't care about investors? Well, he's just said he focuses on the company and for the betterment of the company, and that's what helps investors the most if you're a long-term investor. So I think what he means is like, oh, I don't care about your short-term gains. I'm building a company. I want it to do well in the long term. And so, I mean, with everything going on with AI, I think PLTR is a no-brainer. A ton of you guys love this one and commented it over and over and over again. So it's in the account. I've wanted to own it before. And if it does come down again, I might start investing more in some growth stocks in my Roth IRA because it is fun as well. I'm having a lot of fun with this. So moving on to our third selection. SoFi Technologies, ticker SOFI. For those of you that don't know, this is primarily a banking stock. They are SoFi Technologies, but banking. I didn't know this. SoFi was even higher than its recent highs. Now, I love SoFi. In the long term, I'm going to buy this stock. If it goes anywhere around $10, I'll probably buy a bunch in my normal Roth IRA because I think it's insane. You can see down here, it's a fintech stock. Very, very popular, 44 million, PE ratio of 80. And now I'm going to say, the reason I like this stock, and I am biased, I use their app. So I have a SoFi banking account. And let me tell you, it is so much better. I never once have I had to go inside somewhere to get anything. Refinancing on loans, working with the banker, with brokerages, everything is done through the SoFi app. And I love it. And it tracks everything. So for me, this is the future of banking. I don't need a physical location for banking. You know, I don't know how it does. I've never purchased a home and had to wire money or send a physical paper check somewhere. So if that's something that you do more often, maybe SoFi's not the one for you. But I mean, on top of all this, reason number 2 why I chose this one, I've been wanting to buy this one for a long time. Back when it was below the 6s, I think it was, in the 4 range. And then it ran up to 9. I didn't buy it. It sold back off. I forgot. And then it ran up again. But their high yield savings account is super popular. And here's the thing. SoFi, it reminds me more of social media. Their users just continue to go up. People are getting tired of traditional banks. They're tired of Wells Fargo and Chase. I'll tell you, I went into Chase to open a bank account. It was painful. I don't like it. I don't like they're trying to sell you stuff. They want to make money off of you. And SoFi does too, but they're just quieter about it. It's more nonchalant. They can make money in different ways. They don't have all the overhead of all these giant bank branches everywhere. So I like SoFi. Longevity-wise, I think it will do well. I've been tracking it for a very long time. I can't remember if this one, it doesn't look like it was a SPAC, probably just a launch, but since 2020. So it is newer, a little bit riskier. It is FDIC insured. I know the high yield savings account are, or at least were when I opened one. But again, I like SoFi. I think it's a safe bet. It is overinflated now. It will come down probably, but still, I'm okay with buying it and just watching what it does. It's probably going to be one of my favorites in this account. And this next one, you guys are definitely all going to know. I should have bought NVIDIA. I should have bought it when I first started investing, but nobody knew what was going to happen. This thing's insane. Up 2,000% in the last 5 years. Just the last year alone, it's still up 150%. I'll be honest, I don't think it's going to double again. I don't think the market cap's feasible. I don't think it's going to happen. Do I think it's going to go 20 or 30%? Yes, I do. I imagine it just continues to trail up. The thing with NVIDIA that they're going to start facing now is the government. They're going to become a monopoly if the government doesn't get involved. I mean, they've already gotten involved with a couple of things, which I think is important. We need our government to keep us in check and keep these businesses in check with stuff. But what NVIDIA is doing now to get around that is instead of buying companies, they're just investing heavily into them. So AI, they can't purchase a ton of these other smaller AI companies for the monopoly laws. They're just investing in them themselves, and it'll make them more money. Sure, they don't get a say in what goes on, or as much of a say, I should say. But still, absolutely crazy. 3.33 trillion USD market cap. Again, a PE ratio of 53, which is actually smaller than a lot of these other ones, which is very, very interesting to me. And when we look at SoFi's like the last 6 months, it's still up about 1%. And on the month, it's up 0.6%. So like I said, I like dividends mostly because even when you have a month like this, you still get paid. But long term, I think Nvidia could do well. I think it's going to be a pretty solid pick. I think they're going to keep buying things and keep working with AI. There's going to be a crazy need for them in the future, and I just don't see it going away at all. So Nvidia was an easy choice for me. You guys all know it. You guys all like the NVDY, the Yield Max funds. It's probably one of the most popular, and so we'll see. I've been missing out on buying Nvidia, so now that I bought it, it will probably tank. So be prepared to buy more shares if it does, because that's the curse of how I invest. Let's move on to our next pick. The only stock that's extremely beaten down in the account is AMD. This one has been destroyed. We're down 21.88% on the 1 year. High to low, it's like 40 something, 44.91% beaten down. And it's just falling. I don't know as much about AMD as I do the other ones. I know Nvidia and AMD, I think with the microchips, they're going to continue to do well, or start doing well for AMD's case. But the thing is, if we have world conflict, if we have any sort of issues with some of the Asian countries that produce a lot of microchips, these ones will rocket. And we're moving more and more towards world conflict. I'm not hoping it happens by any means, but I do invest to kind of hedge against something like that happening. And this is a US-based company, and the growth, I think they just haven't seen growth. You can see they have a huge market cap of 1.88 billion, a PE ratio of almost 104. So not a great PE ratio. They got some bounce back. We can see they are running out of support every single time. They hit support, they'll fall back, they'll run up, they'll hit support again, they fall, and now we've just continued to hit support and break through it. So I'm not going to try and time the bottom. I'm okay buying it at this price just to see what happens, because I do have faith in it in the long run. I think it will rebound. I think we will make money. Even if it's not in 2025, I think it will make money in the long run. It might continue to fall, and that'll be hard to watch, but you'll see it here first, and I'm okay with that for the $100 invested. Let's move into our next sector, which is a really, really big one. Zscaler. I'm going to be 100% transparent. I know all my stuff about this stock from Google and from Joseph Hogue's YouTube channel, because he loves this one. He's talked about it a lot, and it has come back down. So if you guys remember, there was a huge attack. It was a cyber attack. I can't remember if it was Microsoft, but this thing just tanked. It was above 250. It tanked all the way to 170, and it's been bouncing around since then. It's cybersecurity at its finest. This sector, guys, come on. This sector, cybersecurity. Think about everything we're doing, everything with AI, everything's going online. Everything's been going online for a long time, but cybersecurity is a more and more common theme in today's world, and I'm buying a lot of cybersecurity stocks. I'll say that. I'm not in cybersecurity. My background's not in cybersecurity, but when I see a sector that I think is going to boom over the next decade, it's going to be tech. And what do you do with tech? You need to secure it. Cybersecurity, especially with things like crypto. I'm not sure how these guys could influence stuff with crypto, but I know cloud-based stuff, they're going to have to protect it. And so Zscaler, they're going to have to bounce back from that painful couple of month period they had where they dropped like crazy. But still, they're up 245% on the 5 year. On the 1 year, they're down 15.71%. So again, it's not beaten down super heavily, but it's got some potential to bounce back. We see the market cap is 30 billion, so a bit smaller. We don't have a PE ratio on this one. So all in all, it might be a little bit of a shot in the dark. I'm not just buying what Joseph Hogue likes. I did look this up as well, although I probably trust him. I'm sure he knows a significant amount more with his background in the industry, in the financial industry. But I always recommend doing your own research. Don't just listen to YouTubers, me included. Sometimes I get things wrong. I am human. You guys are great at pointing it out in the comments, and I always appreciate when you guys do that because it helps me learn. All right, and it helps me learn a ton. I've learned so much more from you guys in the comments than I ever would have imagined. And so I appreciate you guys for that. So Zscaler. And now let's move into our next cybersecurity stock. I was wrong. It was not Zscaler. I'm pretty sure it was CrowdStrike that had that huge drop. It was because the airlines all use it. Down 43% in a day. That must have hurt the old portfolio. It's been trading sideways the past couple weeks, but still up 57% from that low after it dropped really, really heavily. 5-year chart's up almost 510%, 443.7% all time. Same reasons as I like Zscaler. Same thing. Cybersecurity, protection, everything that you really that I like. That's the thing. And investing comes down to what you like and what you believe in. And so you guys might not like this one, and I understand that, but let me know what you think in the comments, I guess. Tell me if I'm wrong. Tell me if I'm missing any that aren't in this portfolio that definitely should be. All right, we have SQ, which is Block Incorporated. Everyone probably knows about this one. It has run up like mad as well. I think it has a lot more to do with crypto now than it used to. So I think it is pretty tied to crypto. And I think it's the only one in the account that is pretty tied to crypto. But this thing, I mean, it used to be $270 and we're still beaten down like mad. And this was pandemic times when this thing was going insane. And look at that chart. It's so ugly. We have a 542% all-time gain. We have a 4.5 that's average volume. Market cap 51.16 billion and a PE ratio of 46.45. So a little bit smaller PE ratio, which is kind of funny. Now, the important thing with Block, you guys have probably heard all of this, and maybe if you're familiar with this one, you've read into it. It's a POS system. That's point of sale, not piece of, but processing. They do 228 billion in payments annually. And so these ones, I think my mother uses this with her business where you can have a credit card scanner that plugs into your phone. You can use Square. You can charge cards through it, and they make a percentage on that profit or on that transaction, I should say. So they have a nice profit with every point of sale, every time someone sells something. And I don't know what the main competitors are. I used to think it was more like PayPal, but I think they're very different now because, I mean, PayPal's in a huge... They're having some red flags with PayPal now anyway, but I think they are pretty similar in what they do. I think Block is a good option. I think it might have a little bit lower growth. We can see, even since 2022, it hasn't gone up that much, as I would like. 30% over the past 3 years, 2 years. But it's kind of a shot in the dark with this one. A lot of people recommended it. It's supposed to have some bounce back potential, and the media as well as just retail investors seem to be really, really interested in this one. So I thought I'd put it in here and just track what it does. It's come down from that insane all-time high. I don't think it's going to go anywhere near there anytime soon. This is more of a long play, maybe some slow growth, hopefully some consistency in the account. Never have I bought a stock that looked like this. I'll tell you, this thing was up 132%. And now from all-time highs, we're down 13%. The whole chart is just insane. I imagine it was a SPAC prior to this. It looks like it, trading around that $10 range. And then it bolted. So it's a very new one. This one's a lot higher risk. It's one of the ones that could make or break the account. But I wanted to throw a few of these in here. It's a software vendor, and they do protection for Microsoft. They were founded in 2001, but they weren't on the exchanges yet. So it's way smaller. It's not a penny stock. It's not even close to a penny stock, but only 3 billion USD in market cap. So risky. Everyone was calling this one out. I think it's going to come down. We'll probably see it come down. I know this is crazy, but it'll probably come back down to like $11. And you're thinking, oh, well, you're going to be down 30%. Well, I might. I absolutely might. We'll see what happens. I think long run, it's going to continue to move upward. There's a lot of news will affect this one crazily. So a little more volatility in the account might be a little bit fun. And if it has a chance to double, and if there's any chance that this account can outperform the high yielding ETF accounts that I'm doing, or the weekly ETFs, or the Yield Max ETF account that I'm doing, all of those fun things, it's going to be with some of these just going to the moon, And I hate saying that because all the stupid people on Twitter say that all the time, or X, but still. If you guys are interested, I'll link some of the other videos at the end of this one for you to check out. Those weekly dividends have been seriously doing some damage. They've been doing so well. The Yield Max ones specifically. So I'll link both those videos at the end for those two accounts. And let's go to our final stock selection. All right, we have Marvel Technology. Now, I know what you're thinking. This is not Marvel like the Avengers. It's just a tech company. Is it owned by an Avenger? It could be. It's not. But look at the growth. I mean, up 80% the past year. Go to the last 5 years, 331%, and a max. Holy smokes. This thing's taken off. So I like this one just because I looked it up. These last two, I really was like, what else should I put in this account? What needs to go in here? What can I do that's a little bit riskier? And here we go. I have a lot more US-based companies. I try to keep it primarily US-based, and they are semiconductor-related tech. So founded in 1995, yada, 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 a good amount of employees, revenue of $5.5 billion for 2024, and a market cap of just under 99 billion USD. They have a dividend. Let's go. Only dividend in the account, 0.21%. So I'm already going to be balling, making 21 cents a year. So we can already basically say this one's going to be the top performer just based off that 21-cent income. I wonder what I will spend it all on. I didn't put Amazon. I didn't do a lot of bigger companies in there because I don't know if Amazon's growth is going to do as well. And I already own it in my Roth. And I don't own any of these other ones. I had sold Tesla previously, like I said, so I like to buy back in. But this is a tough part of the market. We are way overinflated. Everything's been going insane. I mean, SoFi, PLTR, there's a chance that they all drop back. AVPT, Marvel, they could all pull back. And who knows what the rest of 2025 holds. If this thing underperforms all the other accounts, I'll probably still do one in 2026 because it is fun tracking all the different sectors and seeing what's growing and not growing. And if you guys like it, I will definitely continue to do it. So let me know. Don't forget to like the video. I appreciate you guys so much for watching. I'll see you in the next one.